Hi and welcome to another session. In this session, we will learn how to write journal entries when a business makes transactions of sales and purchases. So we will be writing journal entries for sales transaction made in cash and on credit, and the same thing we would do for purchases in cash and on credit. This video is made for those studying in IGCSE, GCSE, AS and A levels. In case you are studying in an Indian board, a separate video has been made for you. The link of that video would be provided in the description box below. This is a series and it has 6 videos. In lesson number 1, the rules for journal entries has been explained based on traditional approach. Another series in which the rules based on modern approach would be explained is coming soon. In lesson number 2, how to write journal entries when a business starts. That is when the owner introduces capital. So how do you write journal entries for that has been covered. In lesson number 3, how to write journal entries when a business purchases assets in cash and on credit has been explained. In lesson number 4, how to write journal entries when a business incurs expenses has been explained. This is lesson number 5. In this, we will learn how to write journal entries when a business does transaction of sales and purchases in cash and on credit. And in lesson number 6, we would learn how to write journal entries when a business takes bank loan. This video contains formats, so I would request you to watch it in full screen mode for best visibility. These are the steps that have been followed to record the entries. I would recommend you to make a note of these steps. These have been explained in detail in lesson number 1, so I would recommend you to watch that video. So let's read the first transaction. The transaction is January 15th, purchased inventory $5,000 in cash. So the first step was to read the transaction. Now the second step is to identify the two accounts involved. Now here the two accounts involved are, one is inventory and second is cash. Now one thing that you need to remember over here is that whenever a business purchases inventory, you will not use the term inventory as account name over there. You would use the term purchases. So when the business purchases inventory, the account name that you are going to use over there is going to be purchases. So here the first account is purchases and the second account is cash. If you have watched the earlier video of this series, you would be familiar with this table. And if you are new, I will explain it to you. Here, this table is in line with the steps that I had shown you earlier in this video. So here you have date and then accounts involved, then nature of account, then what is the rule that is being followed, then a column to write the debit amount and a column to write the credit amount. This is your workings or your rough work which you would do before you record in the journal. I would recommend you to follow this for the first 25 to 50 transactions, as this will help you in understanding the concept well. So the date is January 15th. The two accounts involved are, what was the account I told you that you will be writing over here when the business is going to purchase inventory? It is purchases. So the two accounts involved over here are purchases and cash. The rule for nominal account is going to be applied to purchases. Why? Because purchases is an expense for the business. Whenever a business buys inventory, it is treated as an expense for the business. Therefore, the rule for nominal account is applied to purchases. So the account is purchases. The rule for nominal account is going to be applied to purchases. Why? Because it is an expense. When a business purchases inventory, it is treated as an expense. Therefore, the rule for nominal account is applied. And what is the rule for nominal account? Debit all expenses and losses and credit all incomes and gains. Therefore, purchases account needs to be debited. Why? Because it is an expense. So purchases account would be debited by amount 5,000. Now the next account involved over here is cash. Cash is an asset for the business. Therefore, the rule for real account is going to be applied to cash. And the rule for real account is debit what comes in and credit what goes out. So here cash is going out. Therefore, cash account needs to be credited by 5,000. Let's do it one more time. The two accounts involved are purchases and cash. The rule for nominal account is going to be applied to purchases. Purchases is an expense. So in the rule column, you would write expense. And purchases account needs to be debited by 5,000. Why? Because the rule was debit all expenses and losses. The rule for real account is going to be applied to cash, and the rule for real account is debit what comes in and credit what goes out. So here cash is going out. So in rule we have written going out, and cash account needs to be credited by 5,000. The rule of all the accounts have been explained in detail in lesson number 1. Now let's record the entry in our journal. So this is what your journal looks like. It has 4 columns: date, details, a column to write the debit amount, and a column to write the credit amount. I would recommend you to watch lesson number 2 to have a good understanding of the format of journal. Now journal entry has a structure. In a journal entry, there are 3 things that you record. The account that is to be debited is written in the first line. The account that needs to be credited is written in the second line. And then you write a brief explanation about the journal entry, which is called narrative. Now let's record the entry. We had identified the 2 accounts involved over here, and the 2 accounts involved are purchases and cash. So date is January 15th. You would write the name of the account that is to be debited, which is purchases account, in the first line, and in the debit column you would write the amount 5,000. In the next line you will leave some space and then write the name of the account that needs to be credited. So here it is cash account that needs to be credited, and in the credit column amount 5,000. And then you will write the narrative, and narrative is inventory bought by cash. So this is a brief explanation of what is being recorded in the journal entry to make this journal entry more meaningful. So purchases account debit, in the debit column 5,000, cash account credit, in the credit column 5,000, and the narrative is inventory bought by cash. Now let's record the next entry, and the next transaction is January 16th, sold inventory worth $4,000 and received cash. So when a business buys inventory, the term that I told you to use was purchases. And now when the business sells inventory, the term that you would use, or the name of the account that you will use over there, is going to be sales. So here one account is going to be sales. Sales means inventory is sold. And the second account is cash. So whenever a business purchases inventory, the account name that you are going to use is going to be purchases. And when a business sells inventory, the account name that you are going to use is sales. Again, we will be doing the working first and then writing the journal entry. So we will continue the workings in the same table. You would leave a line and then do the workings for this transaction. So date is January 16th. The 2 accounts involved were sales and cash. So here we have written the name of the 2 accounts involved, that is cash and sales. Then cash is an asset, and the rule of real account is applied to assets. And the rule for real account is debit what comes in and credit what goes out, or debit what comes in the business and credit what goes out. So here we have sold inventory, so cash is coming in the business. So here I have written comes in because cash is coming in the business. So the account is cash. The rule of real account is applied to cash, and the rule is that debit what comes in and credit what goes out. So in the rule column I have written comes in. Cash is coming in. Therefore, cash account needs to be debited by amount 4,000. Now the next account is sales. The rule of nominal account is going to be applied to sales. Why? because we are generating income and sales is an income. The business sells inventory and generates revenue, which is an income. Therefore, the rule of nominal account is going to be applied to sales. Why? Because sales is an income. And the rule is debit all expenses and losses and credit all incomes and gains. Here, sales is an income. Therefore, sales account needs to be credited by 4,000. Let's do it one more time. The date is January 16th. The two accounts involved are cash and sales. The rule of real account is going to be applied to cash because cash is an asset and cash is coming in. Therefore, cash account needs to be debited by amount 4,000. Next account is sales account. The rule of nominal account is applied to sales account and sales is an income. Therefore, sales account needs to be credited by 4,000. Now, let's record the entry in the journal. So you would continue to record in the same format, the format which you had drawn for the previous entry. So you would leave a line and you would continue to record entry in the same format. So date is January 16th. What were the two accounts involved? Cash and sales. So we will write the account to be debited first, then the account to be credited and the narrative. So cash account needs to be debited, that we will write here, and in the debit column 4,000. In the next line you would leave some space and then write the name of the account that needs to be credited, which is sales account, and in the credit column 4,000. And the narrative is inventory sold in cash. Now you need to remember over here that you cannot write the credit entry first and the debit entry next. You have to stick to the structure of the journal entry. So cash account is to be debited. So cash, and in the debit column 4,000. Sales account needs to be credited. So you would leave some space, then sales, and in the credit column 4,000. And the narrative is inventory sold in cash. You can write the narrative in your own words. This is just an example of how to write the narrative. Now let's move on to the next transaction. And the next transaction is January 17th. Purchased inventory on credit from ABC Limited worth $7,000. Whenever a business buys inventory, I had told you in the previous transaction what is the name of the account you are going to use. It is going to be purchases. So here the first account is going to be purchases. Why? Because whenever a business purchases inventory, the name of the account that you are going to use is going to be purchases. And here inventory is bought on credit. So you're not paying by cash or by check, it is bought on credit. In a business, there are a lot of transactions that happens on credit. So whenever a business does a transaction on credit, the second account is name of the person from whom you have bought on credit. So the second account involved over here is ABC Limited. So the two accounts involved are purchases and ABC Limited. Now let's do the workings. So we would continue to do the workings in the same table where we had done the workings for the previous transaction. So you would leave a line and then you would do the workings for this transaction. So date is January 17th. The accounts involved are purchases and ABC Limited. Purchases means inventory is bought and ABC Limited is the name of the person from whom inventory is bought on credit. The rule of nominal account is going to be applied to purchases. Why? Because purchases is an expense for the business. And the rule for nominal account is debit all expenses and losses and credit all incomes and gains. So purchases account would be debited by 7,000. Now the next account involved over here is ABC Limited. The rule of personal account is going to be applied to ABC Limited. The rule for personal account is debit the receiver and credit the giver. Here ABC Limited is giving inventory on credit to the business. Therefore, ABC Limited is the giver of inventory to the business in this transaction. So you would credit ABC Limited's account. So here in the credit column you would write 7,000. Let's do it one more time. So the two accounts involved are purchases and ABC Limited. The rule of nominal account is going to be applied to purchases account. Why? Because purchases is an expense. So in the rule column we will write the reason that purchases is an expense, and in the debit column the amount that needs to be debited to purchases account. ABC Limited is the next account. The rule of personal account is going to be applied to ABC Limited, and ABC Limited is the giver of inventory to the business. Therefore, ABC Limited's account needs to be credited by 7,000. Now, let's record the entry in our journal. So you would leave a line and you will continue in the same format. So date is January 17th. The account that needs to be debited is written in the first line. So purchases is what you would write over here, and in the debit column the amount 7,000. So purchases account to be debited by 7,000. In the next line we would leave some space and then name of the account that needs to be credited. Here it is ABC Limited's account that needs to be credited. So in the credit column 7,000. Purchased inventory on credit. From whom are we buying on credit? From ABC Limited. So let's do it one more time. Purchases account needs to be debited in the debit column 7,000. ABC Limited's account to be credited in the credit column 7,000. And the narrative is purchased inventory on credit. Now let's move on to the next transaction. And the next transaction is sold inventory on credit $3,000 to XYZ Limited. So which are the two accounts involved in this transaction? Well, whenever you sell inventory, the name of the account that you are going to use is sales. The inventory is sold on credit. And the second account is XYZ Limited. Now, let's do the workings. So January 18th is the date. And the two accounts involved are XYZ Limited and sales. Now XYZ Limited is account of a business. Therefore, the rule of personal account is going to be applied to XYZ Limited. And the rule for the personal account is debit the receiver and credit the giver. Here XYZ Limited is receiving goods from the business, therefore it is the receiver. So XYZ Limited's account needs to be debited by 3,000. The second account is sales account, and to sales account the rule of nominal account is going to be applied. And the rule for nominal account is debit all expenses and losses and credit all incomes and gains. So sales is an income. Therefore, the rule for nominal account is going to be applied and sales account needs to be credited by amount 3,000. Let's do it one more time. So the two accounts involved are XYZ Limited and sales. Sales has been made on credit to XYZ Limited. The rule of personal account is going to be applied to XYZ Limited, and XYZ Limited is the receiver. It's receiving goods on credit from the business. Therefore, XYZ Limited's account needs to be debited by 3,000. The second account is sales. The rule of nominal account is going to be applied to sales. Sales is an income. Therefore, sales account needs to be credited by 3,000. Now, let's record the journal entry. So you would leave a line and then you would continue in the same format. So date is January 18th. What were the two accounts involved? XYZ Limited and sales. So first you would write the name of the account that is to be debited, that is XYZ Limited's account, and in the debit column 3,000. In the next line you will leave some space and then write the name of the account that needs to be credited, which is sales account, and in the credit column 3,000. And the narrative is inventory sold on credit, and to whom it is sold on credit? It is sold on credit to XYZ Limited. Let's do it one more time. So XYZ Limited's account to be debited, therefore in the debit column 3000. In the next line, sales account to be credited, and in the credit column 3000, and the narrative is inventory sold on credit. Now let's move on to the next transaction. And the next transaction is January 19th, paid ABC Limited $6,800 in full settlement of the amount due by check. Now I would want you to pay attention over here. Who is ABC Limited? ABC Limited is the business from whom we had bought inventory on credit. And what was the amount of that transaction? The amount of that transaction was 7,000. But we are paying only 6,800, and it says in full settlement. This means that the business has got, or our business has got, discount from the person from whom we bought inventory on credit. So paid ABC Limited $6,800 in full settlement of the amount means in place of 7,000 the person has agreed that you pay me only 6,800. But what about the remaining 200? So the remaining 200 is the discount that we have received, or the discount that the business has received. And how is the payment being made? The payment is being made by check. So you need to remember the previous transactions, or you will have to remember the amount what was due. So 200 you are not paying, but you need to do the full settlement. So that 200 is the discount. So in this transaction there are three accounts involved. One is ABC Limited, second is discount because you are getting a discount over here, and bank account. Now let's do the working. So the date is January 19. The accounts involved are, so in this transaction there are three accounts involved, and the three accounts involved are ABC Limited, bank and discount received. So the first account is ABC Limited. The rule of personal account is going to be applied to ABC Limited. Now here ABC Limited is receiving the money, therefore it is the receiver. So we will debit 7,000 to ABC Limited's account. Now here you need to remember, though we are paying 6,800 to ABC Limited, but we will write the full amount over here. And why we are writing the full amount over here? Because it says ABC Limited had agreed for full settlement, and for whenever it is full settlement you write the full amount over here and not the amount that is paid to ABC Limited. So here you will record the full amount. So full settlement means the amount that is paid plus discount. Now the second account involved over here is bank. The rule of personal account is going to be applied to bank, and bank is giving the money. And how much are we paying from our bank account? 6,800. So here we will write the actual amount that is being paid. And the third account is discount received. Now discount received is kind of an income to you. So the rule of nominal account is going to be applied to discount received. So discount received is an income. The rule of nominal account is going to be applied. And how much is the amount of discount? 200. So we'll do it one more time. First account is ABC Limited. The rule of personal account is going to be applied to ABC Limited. ABC Limited is the receiver of money from the business, and the amount you will write is going to be the total of these two, or the full amount, which is 7,000. The second account is bank account. The rule of personal account is going to be applied to bank account, and bank is the giver of money in this transaction, and the amount is 6,800 because 6,800 is being paid from the bank account. And the third account is discount received. The rule of nominal account is going to be applied to discount received because discount received is an income, and because it is an income, discount received account needs to be credited by 200. Now let's record this in our journal. So date is January 19th. What were the three accounts? ABC Limited, bank and discount receipt. So first we'll write the name of the account that needs to be debited, that is ABC Limited, and the amount was 7,000. Now this includes the amount that is being paid and discount that we have got. So this is the full amount. Why? Because it said full settlement. And then we will write the credit entries. Now in this transaction there are two credit entries. So you would leave some space, then write bank because bank account needs to be credited, and in the credit column 6,800. This is the amount which the business has paid from the bank account. And then in the next line you would leave some space and write the name of the next account or the second account which is to be credited in this entry, and that is discount receipt. So there are two credit entries in this transaction, and the amount in the credit column for discount received is 200, and the narrative is paid trade payables through check. What is trade payables? Trade payables is the person from whom inventory is bought on credit. I have already done a video in which I have explained the meaning of the term trade payables. You can check that also after this video. Let's do this entry one more time. There is one account that needs to be debited. There are two accounts that needs to be credited. So ABC Limited debit by amount 7,000, bank account credit by 6,800, and discount received credit by 200. Now here you will see that the total of the debit is equal to the total of the credit, and the narrative is paid trade payables through check. Now let's move on to the next transaction, and the next transaction is January 20 received $2,900 from XYZ Limited in full settlement. If you remember, XYZ Limited is the business to whom we had sold on credit, and the amount of that transaction was 3,000. Now here it says that received 2,900 in full settlement. That means you are allowing, or the business is allowing, a discount of $100 to XYZ Limited. So in this transaction, let us see how many accounts are there. So first of all, money is being received. So one account is bank account. Now the business is allowing discount of $100 to XYZ Limited. Therefore, the second account is discount allowed. And the third account is the account of the person who's making the payment, that is XYZ Limited. So money is being received in the bank, discount is being allowed, and the person from whom we are receiving the money. Now bank is a business, therefore the rule for personal account is going to be applied to bank, and bank is the receiver. And how much you're receiving in the bank account? 2,900. Here you will write the actual amount. Then discount allowed is kind of an expense for the business. Therefore, the rule of nominal account is going to be applied to discount allowed. Why? Because discount allowed is an expense. And how much is the amount? $100. Now the third account is account of XYZ Limited. So XYZ Limited is a business, therefore the rule for personal account is going to be applied, and XYZ Limited is giving or is the giver of money to the business. Therefore XYZ Limited's account needs to be credited by 3,000. Why? Because the rule is debit the receiver and credit the giver. Let's do it one more time. So first is bank account. The rule of personal account is going to be applied to bank account, and bank is receiving money. Therefore, bank account needs to be debited. Discount allowed is an expense for the business. Therefore, the rule of nominal account is going to be applied. Why? Because it is an expense and expenses are debited. So, in the debit column, $100. XYZ Limited is a business. Therefore, the rule of personal account is going to be applied. It is the giver of money. Therefore, XYZ Limited's account needs to be credited by 3,000. Now, let's record the entry in journal. So, what were the three accounts? Bank, discount allowed, and XYZ limited's account. So bank account needs to be debited. That's the first entry in the debit column, the amount 2,900. Then second account is discount allowed. This also needs to be debited. So this we can write just below the bank account. We don't need to leave some space over here because both of these are debit entries. So discount allowed is the next account, and in the debit column 100. Now we are going to write the entry that needs to be credited. So again we will leave some space. Then name of the account that needs to be credited. It is XYZ Limited's account, and in the credit column 3000. Here we'll write the full amount. Why? Because it's said in full settlement, and the narrative is received money from debtor and discount given. So let's do it one more time. Bank account debit, and in the debit column 2,900. Discount allowed account also to be debited, therefore in the debit column 100. And XYZ Limited's account credited, therefore in the credit column 3000. And the narrative is received money from debtor and discount given. Over here, you can also use the word trade receivable. I hope you have understood all the transactions. In case there are any doubts, you can leave them in the comment section below. If you found the video useful, then give it a thumbs up and subscribe to our channel. And do remember to press the bell button to stay notified about all our future videos. Till the next video, bye-bye.